Business of Property podcast. I'm Simon, and I've been investing in property for over 20 years. And if you're an active landlord or planning your next property investment, this podcast is for you. Now, I assure you, not every episode will be about making tax digital. But people still have lots of questions. And there's lots of uncertainty about what making tax digital really means for people and specifically landlords. So I'm going to tackle a couple more topics today. I also put out an episode around making tax digital a couple of weeks ago. There'll be a link to that one in the show notes for this episode as well. So if you've got questions and I don't talk about them today, do go back and look at that episode as well, because they might be covered there. The first topic for today is to clarify something that making tax digital is not. And the second topic will be for landlords who are also sole traders. Firstly, though, I'm going to quickly recap who's affected by making tax digital. I'm sorry if you heard me go over this a couple of weeks ago, or if you already know these answers. I'll try to be quick, but I suspect you can skip ahead a minute or so if you really do know this information already. So, making tax digital for income tax will affect landlords and people with sole tradership businesses. If your combined income, not profit, income across property and sole trading is £50,000 or more per year, then you must act before April 2026. So that is April next year. Income over 30,000 is covered from April 2027, and income over 20,000 is included from April 2028. Limited companies and property held in limited companies is not part of this. This is all about property owned in personal names, covering property income and tax that you previously declared on your annual tax return, your annual self-assessment tax return, specifically in the SA 105 property pages. Right, that's the basics, the intro over. But a few moments ago in that sort of setup information, I mentioned that limited companies are not affected by this round of making tax digital. And that's definitely true. But slightly unhelpfully, HMRC are making a change that affects limited companies, including those running rental property. And it's coming into effect at around the same time. Now, this is not helpful for clarity of what's changing or who's affected or anything. So I thought I'd mention it today just to try and help clear things up in case you've seen talk about this around as well. So if you own a limited company, every year you must submit a tax return for your corporation tax. Hopefully this isn't news to you. And that's done via a form called a CT 600. Currently, it's possible to do this directly via a service that HMRC provide. But HMRC will be closing that service at the end of March 2026. So after March next year, all CT 600 submissions must be made using third-party software. You might be thinking this sounds a lot like making tax digital. It's around April 2026, and it's talking about using third-party software to make tax submissions. But it's not making tax digital. Making tax digital comes with specific requirements about keeping digital records and sending data every quarter. The change for corporation tax returns, i.e. CT 600 submissions, is just about the software that's available to use. For the large majority of limited companies, you're probably using an accountant. And that accountant is probably already using third-party software to prepare and submit your CT600. So, for most people, most limited companies, and most accountants dealing with limited companies, nothing will actually change. For those that do your own CT600 returns direct with HMRC, you will need to find some extra software to help after March next year. It's not specifically under the banner of Making Tax Digital, though. Okay, with that clarified, next up, let's talk about people who are landlords and sole traders. Maybe after you retired with your property portfolio, you started taking on some decorating for other landlords, and before you knew it, you had £10,000 or £20,000 of sole trader income on top of your properties and your property income. Or maybe, just as a random scenario, you started a web hosting business a long time ago and didn't know any better at that time, so now it's still running as a sole tradership alongside the property portfolio you've built up since. No idea where I might have got that idea from. But anyway, whatever the backstory, you've ended up with two businesses covered by Making Tax Digital. Remember, when working out if Making Tax Digital affects you, it's the total income across all relevant businesses that the £50,000 or £30,000 or £20,000 per year income is being compared to. So with multiple Making Tax Digital businesses, do we need to make multiple returns every quarter? Unfortunately, the answer is yes. The data for each business must be submitted to HMRC every quarter. That means all records must be up to date for each business, and as it happens, kept digitally and in accordance with all of those Making Tax Digital rules. You must then review the totals for each business, and you must click a button to send that data, that information, those totals to HMRC for each business. Hopefully, you're doing the record keeping already, but unfortunately there will be a couple of extra clicks rather than just one for one business. In theory, you could use a single piece of accounting software to cover both businesses, and that software could streamline the submission into a single click each quarter. So they could give you the summary for both businesses of together at the same time, and you could submit them together to HMRC. I'm not currently aware of any software that is actually doing this, though. If you're aware of something, please let me know. I like to stay aware of the options that are out there for people, so that would be interesting to know. So, do you have to use the same software to track and submit accounts for both businesses? And here the answer is no. Each business is treated separately by HMRC, and different software can send data for your different businesses. So, for example, you could use PATMA for your property portfolio with all the property-specific features for compliance and tenant management and etc. that you can take advantage of within PATMA, alongside keeping track of all your finances and being able to submit your property business, your property totals and tax information to HMRC as part of Making Tax Digital. Then alongside that, you can use just basic accounting software for your sole tradership business. Each piece of software will submit the quarterly data for just the relevant business. At the end of the year, the software you use for your final tax return will collect the year totals from HMRC for each of the Making Tax Digital businesses. So one of the features of Making Tax Digital is that it's kind of a sort of two-way process. Each quarter, and then at the end of the year, for each business, you submit the totals to HMRC so that they have got that information ahead of time, and so that they can give you extra feedback and information ahead of time as well, so you can plan better for the year, hopefully. But most critically, that information is then held against that business with HMRC. So any other Making Tax Digital software that is then doing your end of year tax return, your final normal self-assessment tax return that brings it all together, can actually ask HMRC for the year-end totals for each of the relevant businesses that you have. So this means that chunks of your tax return will be pre-completed and there's no re-entry of anything. And that works across multiple software systems. It doesn't all need to be the same bit of software because the data for each of the businesses is held centrally with HMRC, and each of the individual bits of software is talking to HMRC and asking for that, if then pulling everything together at the end, or submitting just that little piece of information, that little bit of data for the one business to HMRC if you're updating it each quarter and then at the end of the year. So that's all for this week's exciting Making Tax Digital questions. I do hope that it has been useful for you, even if perhaps it hasn't been all that exciting. I'm still offering one-to-one calls for any landlords with Making Tax Digital questions. Please use the link that's in the show notes if you'd like to book such a call. Alternatively, you can visit patma.co.uk, that's patma.co.uk, click on Property Manager, and then at the top of the page, there's a button to book a demo call, where you're also very welcome to ask about Making Tax Digital if you wish. Thank you very much for listening, and I look forward to speaking to you again next week.